The Trade Desk is a digital advertising buying company that helps businesses, enterprises worldwide purchase digital advertising. Of course, the tailwind is that digital advertising is increasingly in demand as people spend more time online, on their phones, on their devices, and increasingly consume more data online, which offers more opportunities to offer more ads online. So the Trade Desk, partly because of those tailwinds, has experienced a burst in 2024. The share price is up over 84%. But what about 2025? The company has announced an excellent or an exciting new product that could deliver more gains. Is it a buy for 2025? Should investors buy the Trade Desk before 2025? That's the question I'm going to answer in this video. Looking at the company's prospects, evaluating it against its valuation, I'll look at the valuation both on a forward PE basis and on a discounted cash flow basis to determine if I think investors should buy this growth stock before 2025.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
The Trade Desk over the last decade has done an incredible job growing the business up to $2.31 billion in trailing 12-month revenue, up from less than $300 million in 2017. It's almost 10x its revenue in the last 7 years or so, partly fueled by those tailwinds in the digital advertising industry I highlighted earlier. What's more, in 2025, the Trade Desk is coming out with a new product, a new TV operating system similar to what Roku has, and the market is excited about the prospects of this product. The Trade Desk, its current digital buying business, is so strong that investors are excited about the prospects of that new product. The Trade Desk has always focused on the connected TV space in the digital advertising industry, and now coming out with its own TV operating system for the connected TV. That's really an incremental burst in its existing category where it has a strong foothold already. So that could add, although 2025, it likely won't gain significant market share initially, but over the several years after that, it could be another catalyst for growth for the Trade Desk. Now, more impressive than the Trade Desk's revenue growth has been the improvements in cash flow and operating margin. I'll start with cash flow. So, of course, in 2020, the company's prospects surged, right? It facilitated purchases of digital advertising. And of course, digital advertising was incredibly popular when people were spending more time at home, and marketers wanted to reach those people spending more time at home, consuming more content online. And then there was a bit of a reversal during the economic reopening. Still, the Trade Desk has maintained very strong cash flow from operations to sales at 27% most recently. Similarly, its operating profit margin had experienced similar trends, a burst here in 2020, and then further downside here. In fact, if you go back to 2017 all the way to 2023, the company's operating margins had been falling. That is until late 2022, when it turned things around like many tech companies did, when they really focused on improving profitability. When interest rates were extremely low, as they were in the better part of the 2010s, all the way up until 2022, companies that were focused and had growth opportunities focused on those growth opportunities. They weren't so interested, or they weren't so concerned about profit margins. But when the cost of capital increased, that's when companies like the Trade Desk focused more on improving margins. And it's been effective for some companies like the Trade Desk, which has increased its operating margin up to 16.29%. And this is all the while it was investing in the research and development to bring this TV operating system to the market. It's announced to come out next year in 2025. So impressive growth here, both on the top line for the Trade Desk and in terms of margins. Now let's look at valuations for the Trade Desk. When I'm measuring it by the forward price to earnings ratio, the company's shares are trading at a forward PE of 67.85. which is relatively expensive when you consider the average stock in the S&P 500 trades at a forward PE of around 22 right now. And so you're paying roughly triple the price for the trade desk. Now, the stock does deserve a premium valuation because of the revenue growth it has demonstrated, the improvement in profitability, the improvement in cash flow from operations, the competitive advantages it boasts, and the fact that it operates in an industry that has a total addressable market over $1 trillion that the trade desk is barely penetrating, especially outside of North America. Still, roughly 85% of the company's revenues are coming from North America. And so it has a massive opportunity outside of North America to expand its advertising revenue, its advertising base. And then when you add to that the new product, the connected TV operating system, you can understand that investors are willing to pay a premium valuation for this stock. Additionally, I've done a discounted cash flow valuation for the trade desk, and the intrinsic value per share, according to my discounted cash flow valuation for the trade desk stock, came in at $49.44. That's compared to the current market price of $132. However, when I changed the beta and adjusted the beta downwards, which is one of the most important inputs to this valuation model, is the beta, which is at 1.47 according to Yahoo Finance. When I adjusted this downward to 1, it gave me an intrinsic value per share for Trade Desk at $78.53, still more than the current market price I have here. So all things considered, is the trade desk stock a buy before 2025? Should investors buy this before 2025? I would say no. I would say it would be more prudent to wait for a pullback in the share price of the trade desk stock before starting to accumulate shares. I wouldn't be in a rush to accumulate shares of the trade desk stock. What valuation would I be looking for? Well, if I'm looking at the forward PE, I would look for a forward PE in the mid 50s. So 55 or so would be a good entry point at a forward PE basis for the trade desk stock. But what about actual market price? What actual market price would be an attractive entry point for the trade desk? I would look for something closer to $100 per share. I know that's a significant drop off from the current share price of $132 per share, but that's how much the stock price has risen in 2024, and it's created that kind of gap between the intrinsic value and the current market price. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.